So you're considering investing in the stock market, maybe even for the very first time. Well, good, you've come to the right place, because today I'm going to talk to you about all the things that you need to get started investing in the stock market. And make sure you do stick around to the end, because I'm going to be talking about the process of choosing the right broker for you, and also the paperwork and other things you need to have in line in order to actually get started. Now, I was pretty lucky growing up. My dad was teaching me about the stock market when I was 10 years of age, and I actually started investing at 10 years of age. And I never stopped and I never looked back. And over time, these investments, along with other techniques that I'm going to talk to you about in future videos, that allowed me to earn enough money to buy my first $1 million house just barely at the age of 27. And I have no credit card debt, I have no car loan, and all of my study tuition has already been paid off. Now, I'm not saying this to show off to you because there's nothing particularly special about me, but what I did was learn at a young age how to spend my money, how to save my money, how to invest my money, and that helped me earn enough money to set up a really good financial start to my life. And that's what I want to help you guys with as well. Now, before I get into the nitty-gritty of this video, because there's a lot of things that I really want to touch on and paint a really good picture for you guys, but before I do that, pause this video, comment down below, just let me know if this is your first time that you're considering investing in shares. Will it be your first time investing? And while you're at it, please hit the like button. It makes an enormous difference to the YouTube algorithm and it helps me grow my channel. And I've noticed that a lot of the time, less than 10% of you actually go ahead and click the like button. All right, let's get into it. There are 5 very important things that you need to be ready to start investing in the stock market. Time and effort, goal setting, money, no credit card debt, and a broker. So I really want to go through each of those 5 points with you that I think you need to get started. So let's get into the first one, and that is time and effort. In my opinion, it wouldn't be wise to start buying shares just because you heard people talking about it or you think, oh yeah, that's a good way to make money. So for me personally, I never ever buy stock in a company unless I've done quite a bit of background research on what they're all about, how honest they are, what their profits look like, where their future is headed, all sorts of factors like this. If I don't have time to dedicate to really look into a company to know if they're worth putting my hard-earned money into, then I'm not going to invest in them. The next thing I want to talk about is goal setting. And goal setting is the one thing that I notice on YouTube with all these different tutorials and explanation videos. So many people neglect to mention that goal setting is critical to investing in the stock market. I will never ever invest in a company before I have a really good idea of what I want to achieve out of a particular investment. Okay, take this drawing for example. We've got I to represent our initial investment. We've got div that represents the dividends we're going to earn along the journey. We've got our goal earnings, which is what we're looking to achieve in the long run. And then we've got that minus our tax and brokerage costs. So these are the important factors that we use to calculate what we're setting out to achieve. Now, let's say we've had our eye on a particular stock for a little while, and we're waiting until the price hits about this mark. So it starts here, we're gonna wait until it does its thing, and then boom. We're gonna buy that stock because it has hit the price that we are looking for. So now that we've done that, we'll mark that as 0 years. We've only just bought the stock. Now in my mind, when I purchase a stock, generally I like to say I'm willing to wait 10 years until this comes to fruition and my plans have been achieved. So I'll mark here 10 years. Right in the middle here, we'll mark 5 years. And then I'm gonna set myself a final goal. I wanna sell when it gets to here, when it gets to this point. And I'm willing to wait 10 years. And hopefully, and things change, but hopefully the stock will look something like this and I will sell. Now, along the journey, considering this has taken, in this example, 10 years, we can expect to see along the journey, we'll earn some dividends. Let's just make up those dividends. Now, where I've just drawn those lines for dividends, that is money that I'm going to receive from that company as a sharing of their profits just for being in part investor in that company. Now, these are the factors we need to work out before we invest. So now we know that we've earned this much price rise. Sorry, that's a bad line. This much of a price line before we have bought and sold the stock, plus all these points here where there are dividends, This is money that we've made along the journey. So we have earned all the dividends plus the difference between the prices that I bought and sold at along the journey. And that is per stock that I hold. So if I own 100 shares in a company, I will get this price difference times by each share that I own. So I will get that price times 100. Now all I've got to do is add up the difference here plus all the dividends I've earned along the way. Then we have to subtract our tax and brokerage fees, and that is our total earning outcome. Now this picture is our 10-year plan, and it might come true in 10 years, but it also might come true in 5 years. We might find that we buy here and it goes like this and hits the same point in not a very good drawer, in 5 years' time. And if that's the case, no problem. We set out to achieve this plus the dividends that we've earned along the way. And if that equals our total goal earnings after we calculate the tax and brokerage, then we've achieved our goal in 5 years and we can move on to the next investment, or we can keep our money in that stock because it's outperformed what even we expected. Now, this all looks very simple on paper, and that's because it is very simple. The part that is complicated is trying to assess what you are trying to achieve before you even invest. You want to have a good idea of something like this drawing that I've done for you in your head to know what you are setting out to achieve, how long you're prepared to wait before you even pull the trigger on buying that particular stock. And I will do that for every single investment that I make, no matter how much or how little money I'm putting into it. Without having these really clear goals set out from the very, very beginning, we're going in a bit aimless, we've got no real intention, we're just putting money in and hoping to make some big bucks over the journey. We don't even know how long that will be. We need to sit down and figure these things out beforehand so that our investment has a real purpose and real intention, and we know exactly what we're trying to achieve from that investment. Now, the next thing I want to talk about is money, but not just any form of money. This needs to be money that you are willing to put aside for a long, long time. If you cannot be without that money for 10, 15, 20, 30 years, then it's probably not right for you to invest it right at this moment. Treat investing in the stock market a little bit like buying a house. You'd never buy a house, have a huge loan, expect to sell it in 3 months, 6 months, 9 months, make a huge profit having paid off your loan. That's just not how it works. The reality is you're going to have a loan for 10, 15, 20, 30 years, maybe even longer in some people's cases. And the only way you're going to make some money out of that investment is waiting long enough for the market to pick up, for the price of your house to increase, for you to pay off your loan. It is a long-term plan, and stock market investing needs to be exactly the same. We need to have intentions to go in for a long time. For me, since the very beginning, that has always been my approach. Invest for long term, and sure, the price might go up and hit your goal quite quickly, in which case there's no problem with selling it if that is your intention and that's what you set out to achieve. But you need to be willing to wait quite a long time to reach your particular goals. Over a period of time, the market will always boom and it will always crash. It's just the reality of the way the world works. And if we're in it for the long haul, then when a market does start to crash, depreciate, it doesn't make an enormous difference to us if we planned on holding for a long time anyway. We can just ride the wave, wait until we get to where we want to get to, as long as that may take, and just sit back and enjoy the ride. Now, the next point I want to touch on quickly, but it's really, really important, and that is make sure that you completely clear your credit card debt. If you have a credit card debt, most likely you are paying anywhere from 15 to 25% interest, which is enormous. That is an enormous amount of money to pay. So before you do consider investing in shares, pay off that debt, because even just paying that to zero, that is actually earning you that 15.5% that you would normally be paying. All right, now we're on to the final thing that you need to invest in the stock market, and that is a broker. Now, brokers come in many forms and it can be really confusing for people. But at the end of the day, what you want to understand about brokers is that a broker connects you to the stock market and to the trading world. Without them, you can't do the trade yourself. So when you think about brokers, I want you to think about platform 9 3/4 from Harry Potter. If you think about that platform 9 3/4 in the movie, that acts as a bridge between the Muggle world and the magical world. And that is exactly the same as a stockbroker in the real world. We've got our normal life and the normal world happening on this side. And then as we cross through that bridge, run through that wall, we're in a mystical, magical land, which is where the stock market is. And that's where all of the trades happen. So when we think about stockbrokers, we want to think about it as they are the bridge that connects us from the real world to the trading world. And without them, we can't trade shares. Now, the part where people get confused about stockbrokers is when I say the word stockbroker, you guys are probably picturing a person, someone specific you can talk to on the phone, you can go and meet with, and that's not always the case. There are two types of stockbrokers in the world. There are full service advisory stockbrokers, and then there are non-advisory stockbrokers. And the non-advisory categories are broken up into two categories, which is on the phone non-advisory brokers and online non-advisory brokers. So let's go through those three things right now. A full service stockbroker is a physical person that you speak to, you meet with, you can talk on the phone, and their job is to act on your behalf, give you their professional advice, give you their opinions, walk you through what you can be thinking about, and it is in their best interest to do the best for you, their client. Now, full service stockbrokers charge considerably higher rates because they're offering you a service. They are going through your financial situation, assessing what is right for you, offering advice. You can ring them at any time. That is a big service and it's much, much more personalized to what you need. And that's why they charge you more for that service. Now that brings me to non-advisory stockbrokers. First of all, we'll talk about the ones that are on the phone. So an over-the-phone non-advisory broker is someone that you literally ring just to make trades. They're not going to offer you any advice, no opinions. They're not going to go through your financial situation and work out what's best for you. Their job is like Platform 9 3/4. They are just connecting you to the stock market world. They are going to do your trades to buy, your trades to sell. They have no other responsibilities to you. And for that reason, they're considerably more affordable, but still less affordable than the online options. Now, the reason people would use this type of broker is it's fairly self-managed. You're doing all the work by yourself. You're just not physically enacting the trade. So if you're pretty confident with your own situation, then it's okay to do it this way. And it's also a lot more affordable. So it can be a really good avenue if you want a self-managed portfolio. And the final type of broker is a non-advisory online broker. Now, this is fast becoming the most popular method to use because it's really easy. You get all the information you need. The data's really, really good. They can be very secure if you bank with the right people and trade through the right people, which I'm going to go over in just a minute. You just simply go on their website or download their app. You can do it all through that interface by yourself. You don't need to speak to a person to do the trades. The actual app and the buttons that you click, that acts as the broker. This is another self-managed way of trading. You are on your own. There's no one on the other side to help you. You're not going to be getting advice. It's not going to be personalized to your financial situation. You are entirely on your own. But if you know what you're doing, it can be a great avenue, and it is the cheapest or the most affordable of the three options. Okay, now that you know the type of brokers that are out there, I want to offer my opinion on which way I think could be best for you. And I don't even know you, so I'm going to give you a few options and you can follow that whichever way you please. When I was new to the stock market, I did all of my trading through a full service stockbroker. I liked that I could call him whenever I needed, go and meet him whenever I wanted to. He would give me the advice that was tailored specifically to me, and that gave me a lot of confidence. It taught me a lot about the stock market. I learned a hell of a lot over that period of time. And having that safety blanket of knowing that I'm getting professional advice tailored for me, that was well worth spending a bit of extra money for. But in more recent times, I've moved to online trading. I do all of it through the Westpac online investing app, because I'm familiar with it, it feels comfortable for me, and I'm confident enough in my own ability to invest in the right companies. So online works well for me now because I feel I don't need quite as much advice as I did when I was starting out. Now, my advice for which one to use, particularly if you're going online, would be stick with the major banks. If you live in Australia, that is ANZ, Commonwealth, Westpac, National Australia Bank. The big four, make sure you stick to them because we know that they are very well backed, they are very secure, very stable, they've survived the test of time, and I personally feel a lot safer and more secure putting my money in those apps. Sure, there are plenty of cheap platforms out there, some I'm sure are even free. I don't look into them because I like having the extra security, knowing that I am banking and investing with a really reputable company that is safe and secure. To me, that is worth paying a small premium for, particularly if you're going to follow the advice I gave earlier in the video and you're investing in the long term. You're not going to be making enough trades that the brokerage fees that are slightly higher are going to be hurting you so much. It's going to be very manageable. So if you are a beginner, not very experienced, my advice, stick to the 4 major banks if you do go online. But if you don't go online, it's probably really helpful to get a full service broker to really hold your hand through the process. It is well and truly worth getting that information tailored to you. Goes a long way. And something really important to know is you can change broker at any time. You might outgrow your platform, outgrow your full service broker, start to learn more, understand it well enough. You can do it on your own. You can move across platforms anytime you like. So don't feel that you're locked into one, because you're not. All right, now, last step of the process. You've decided you're going to start investing in shares. How do I actually do it? Another very good question from you. You're very astute. Firstly, you need an active bank account with money in it that you are willing to put away for a long time. As far as how do I start the process, what sort of paperwork and what files will I need, it's all pretty simple. So if you decide to go with a full service stockbroker, you just need to research online someone that you're comfortable speaking to, a company that you're comfortable working with, people who have good reviews, have really, really good history in the market, people like that. So you find your broker and then they'll run you through the process. They're going to hold your hand like you can't imagine. It's a fantastic way to get started. If you choose to go the online option, you would first need to choose which of the 4 major banks you're most comfortable banking with. You might already have a bank account with ANZ or Commonwealth or any of the 4 major banks. And if you do, the process is way more simple because they already have all your information online. You might need to update your signature or send them some more ID, but it's pretty straightforward. Now, if you are like me and you use an app that is a company you don't bank with, that's when you start to need a little bit more information, but it's still not complicated. You would just go to their website, follow their application form, follow the steps you need to take, and then towards the end, most of the time, they'll ask you to post something out to them, but they will give you a replied paid address. Usually, you would just need a signature, the date, one form of ID, and you need that to be certified. So you might need to go to a lawyer or just your post office. Most post offices have staff that they are professionally allowed to certify documents. So you'll take in your passport, for example, they will scan that, the original copy, they'll photocopy that. They will then sign next to it that it is authentic and they have the right to do that. You will then fold that up, put it in an envelope and send it off to the bank that you are willing to use. Then it's just a matter of how long does it take for the post to get to the bank, them to look at it, approve it, and send that approval back to you. That can be 1 week, 2 weeks. And after that, if you get approved, you're up and running, your account's open, you're good to go. All right, before I fully wrap this video up, I want to just do a quick recap. So before you buy shares, especially for the first time, or if you're a beginner, please make sure that you consider these 5 main points that I talked about in the video. First, make sure that you can dedicate the necessary amount of time and put in some effort into researching and looking into the companies before you invest in them. That's going to go a long way to ensuring that you make better decisions with your money. Next, you want to set good, clear, and well-outlined goals that you want to achieve for each investment. That means your buying price, selling price, your earning goals, how long you're willing to invest, all sorts of factors like that. Next, you want to have money in an account that you are willing to put away for a long period of time and that you will not need in the short term. You also want to make sure that you completely pay off your credit card debt because it is not beneficial to invest in shares when you're paying 15 to 25% interest on your credit card debts. And last but not least, choose a broker that suits you. Do not be ashamed to use a full service broker that can help tailor your investments to your situation. But if you feel confident that you can do well on your own, then using one of the 4 major banks, using their platforms, their apps, their websites is another great, really inexpensive option. Woo, we made it. Guys, That was a long video. I put a lot of detail into that one. I really hope that was beneficial because I didn't want to make the generic video that they've done so many times. It's been done to death on YouTube. I really wanted to make a video for you that you could use and is practical and is the sort of things you need to be thinking about before you get into the stock market, because it's not as simple as, yeah, I want to invest some money, I'll make the big bucks in shares, cool beans. It's a lot more complicated than that, and a lot of thought needs to go into it before you start to commit. So I really hope I gave you all the information that you need to get going, or at least to take the next step on your journey. I want you guys to have this to come back to anytime you need, to reference, make sure that you're thinking about the right things, have everything in order, and are not afraid to get the ball rolling. But in case there were things that I missed, please don't be afraid to ask me down in the comment section below. And if there are things that I missed that you know, please feel free to share that with everybody down in the comment section. I'd love to hear some of your thoughts on what people should be thinking about to start getting into shares. Please like this video. It only takes 1 second and it makes an enormous difference to the YouTube algorithm. The more that you guys support me, the more love you give me, the better it is for my channel, the faster I can grow, the more people I can reach and help, and that's exactly what I'm going for. Subscribe if you haven't already, and until next time, I'm Dan, and you've been Dansplained. See ya!